Hi friends, let us learn GCC VAT today. What is VAT? What are the GCC countries? Let us see the list of GCC countries first. We have 6 countries in the GCC. They are UAE, Saudi, Oman, Qatar, Bahrain and Kuwait. VAT is an indirect tax that is levied on goods and services at each stage of production and distribution. Why was a tax system or VAT introduced in the Gulf countries? Oil was the sole revenue for Gulf countries. When the prices of oil dropped in 2015, Gulf countries realized the need for diversifying their revenue streams. Thus, in 2016, Gulf countries signed the treaty for introducing VAT in the GCC countries. Now, the next question that comes to the mind is, which are the countries that have introduced VAT? We have got 6 countries in the Gulf Cooperation Council. Out of the 6 countries, 4 of them have introduced VAT. UAE, Saudi, Bahrain and Oman are the countries that have introduced VAT. UAE and Saudi introduced VAT on 1st January 2018. On 1st January 2019, Bahrain also introduced VAT. From April 2021, Oman also have started implementing the VAT. It is expected that in the upcoming years, the other 2 countries, Kuwait and Qatar, will also introduce VAT. Similar to CBDT in India, there are authorities that governs these laws in the respective countries. In Saudi, it is governed by the General Authority of Zakat and Taxes. In UAE, it is the Federal Tax Authority. In Bahrain, it is the National Bureau of Revenue. And in Oman, it is the Oman Tax Authority that governs the provisions of this law. These governing bodies have drafted the law of all these countries based on the treaty that is entered by all these countries on the 36th Council meeting. So understanding the law is very simple. If we have a detailed knowledge of VAT of one of these countries, it is very easy to know about the concept of VAT in other countries too. In this video, let us concentrate on the VAT laws and regulations and various decisions introduced by the Federal Tax Authority in the UAE.